Good morning, ladies and gentlemen. Welcome to the Zeder Interim Results presentation. My name is Johann Le Roux, and I'll today be taking you through a short presentation. On the agenda for today, we'll be discussing some noteworthy transactions. These are matters that transpired since our year-end, end of February 2021. We'll spend some time on our interim financial statements, some valuation adjustments on some of our portfolio assets. I'll discuss our portfolio, how they've been doing over the last 6 months, what's lying ahead, and also how COVID's affected our portfolio. And then we'll deal with some prospects of our business and our portfolio companies, as well as our strategy. There'll then be a Q&A session after the presentation, and I ask that you please send your questions to the email address on the screen during the presentation, so we can answer your questions at the end of the presentation. In terms of noteworthy transactions, a few things that happened past year end. We paid a further special dividend to shareholders, that 20 cents, just over 300 million rand returned to shareholders. That was in addition to the almost 4 billion return as a result of the Pioneer Foods transaction in the prior year. Our portfolio at our year end did well. We received dividends from TLG, Capespan. Kaap Agri also restored the interim dividend, and that meant another 90 million rand of cash that came to Zeder during the period. The EAC transaction, the transaction that Zard was looking at, was concluded during the period. Zeder assisted with a bridging loan to conclude that transaction. We're excited about that transaction. And then just in terms of the buyback of shares, Zeder did not buy back any shares since our year end, and it's mainly as a result of the caution that we're trading under and the resultant close period. Just to note, in the prior period, we did buy back shares to the value of 426 million rand. In terms of our interim results, just spending quickly on our results, the sum of the parts and COVID. We've had a good 6 months. Our NAV per share increased from 4.33 rand per share to 4.45 rand. If you add back the special dividend was paid, it's a 7% increase for the 6-month period. We've had upwards valuations of our logistics business and Kaap Agri. Combined, that was a sum of the parts uplift of just under 400 million rand. And also, if you add back the special dividend during the 6 months, about 700 million rands added to our sum of the parts during the 6 months. We are in our annual input cost cycle for some of our agri companies. So investments like Capespan and Agrivision that normally make losses in the first 6 months of the year, there were no adjustments to those valuations. And we still have a discount, still around 30%. It's not unique to Zeder. It's in line with other investment holding companies. In terms of our balance sheet, we've got a strong balance sheet with 470 odd million rand in the balance sheet. We're well positioned. We can assist our portfolio companies. I mentioned the cash flow received from our investments and also the dividend we paid. And normally at our interim period, and also as a result of the kind of input cost cycle, we don't declare dividends. The board's made the decision not to declare dividend in light of the recent special dividends paid. But also just to be cautious during the COVID period that's still continuing. In terms of our sum of the parts, I'm just putting in the 3 periods here. If you take August last year to our current year, the last 12 months, our sum of the parts have increased by 25% over the 12 months. That's if you also include the special dividend that was paid. If you look at our portfolio, it's actually a very nice balanced portfolio here with our 4 biggest investments, all each making up about 20% of our sum of the parts. Zeder has got no debt. You'll note the lowest shares in issue, up to year end, and obviously since year end the shares have remained the same because we haven't bought back any shares. And therefore the sum of the parts currently at 4.45. And mainly as a result of the increase in valuations of the logistics group and Kaap Agri's listed share price. As I mentioned, our discount is still about 30%. It was slightly higher, at year end. It's come down, probably as a result of the cautionary. But as I mentioned, it's not unique to Zeder. In terms of COVID, I think we all know the impact on South Africa and globally. GDP retraction. Recently, the unemployment numbers came in South Africa. They didn't look good. Our economy is struggling. We're not getting the relevant growth that we require. I think the one or two things that counting in our favor is probably the current low interest rates, and obviously there's a bit of a commodity boom. So I think in terms of tax revenue, our mining companies contributed to that. But the main problem is just the continuous waves. It's very difficult for business to return to the new normal with these continuous waves. And I reported in July that the main problem is probably access to vaccination. It seems like the problem at the moment is just a slow vaccination rate. In terms of Zeder and our portfolio, we've been very, very fortunate. Our management teams have been proactive, during lockdown 5, but straight through put in very, very good measures. The long-term impact remains uncertain, but our portfolio has really done well over the past 6 months. The balance sheets have been strengthened. Zeder sitting on cash, so we can assist them where required. I think the biggest problem we currently have is in global supply chain. It is a real problem. Shipping, access to containers. So we're keeping a close eye on supply chain constraints in our portfolio. In terms of our portfolio review, we've had a very good 6 months. We are mostly in agribusiness. The climate's been good. We've had a good 6 months now, but also actually a good 12 months. And I'll spend some time on each of our portfolio companies. Zaad, our biggest business, a seed and agrochemical business run by Antoni Jacobs. Just all the brands there. You'll note the East African seed at the top of the screen on the left. That is our new acquisition in East Africa and Kenya. We're excited about that business. And this is really a multinational business, with reaches not only in South Africa and Africa, but also in North Africa and the Middle East, Turkey and in Europe. This business's main focus going forward will be on margin optimization. The business is still growing nicely. I think we've got all the building blocks that we require for this business. So we're excited about Zaad and its prospects going forward. In terms of their results, Zaad did undergo a year-end change from January to June, just to better align outside the key summer crop cycle. So the 12 months is probably not comparable to the previous 12 months, but if you would compare it, it reached 177 million profit up till end of June, compared to the January 12-month period of 181. So it's pretty much in line. You'll see the debt in this business has been relatively stable, and as I said, the focus here is to optimize the margins, improve cash flow, and reduce debt over time. In terms of the valuation of Zaad, as a result of the flat earnings for the 12 month, we've not adjusted the valuation. Just in terms of the valuation considerations, we look at market-related EV/EBITDA multiples. We do split the business into the seed and the chemicals sections. They command different multiples. And we normalize the EBITDA downwards to kind of exclude the accounting effect that Zimbabwe is currently facing with hyperinflation effects. And then obviously the net debt is deducted from the valuation. In terms of the business in the past 6 months, we've had very good performances from Maize Seed. That's a business located in Turkey. Farmag is our agri-chemical business. Our African operations also performed well. Bakker has had a bit of a hiccup with COVID-19, mainly as a result of tenders not materializing and kind of cross-border trades was difficult to do into North Africa and the Middle East. That's a big focus for us. The business is end of June restored to profitability, so we're actually very happy with the progress we can see there. In terms of the recent unrest in KwaZulu-Natal, limited damage for the Zaad Group. We've had slight damage at one of our agrochemical businesses in Durban, but it was fortunately, only limited to some of the administrative block and not our warehouse as such. As I mentioned, the EAC transaction was concluded. Our key focus there would be to push some of Zaad's IP products through those distribution lines. It's really a great business, and we're very fortunate to be able to partner with that group. In terms of agricultural conditions, it's mostly favorable for Zaad, especially in Southern Africa. So we're very happy where the business is going. In terms of COVID-19, I mentioned some supply chain constraints we have. There are some units where we import seeds, grow it here, and then distribute. There's been some hiccups to get them in time, but management is focusing on putting the relevant measures in place to mitigate for those constraints. Our logistics business run by Anton Potgieter, a great business, asset-light business. If I look at some of the brands here, Trade Quarter is our back-of-port operator in Port Elizabeth. FPT is the old fresh produce terminals, also now handling bulk and break bulk. Port Stevedoring is our stevedoring business. It pretty much loads a ship from warehouse, across the quayside onto a ship. The Gestau Terminals is our terminal operating business in Mozambique, just past the Komati Poort border. And this business has had a fantastic 6 months. The earnings up over 178%. And you must just bear in mind that it did come off a low base in the previous 6 months as a result of COVID, especially lockdown level 5s, where the ports were pretty much closed. So there is a slight reason for it, but the business has done very, very well. If you compare the 6 months to the prior 6 months, the 90 million versus the 30 million, all the numbers, revenue is up. So the business is really doing well. The main reasons for it is there's a commodity boom. So there's been lots of commodities flowing out of the country. Agriculture is also in a good space. So agri-bulk, fertilizer has been coming in the country. So that's been very, very promising for this business. But the management team has also come up with great new initiatives, and we're excited about this group. As a result, the valuation of TLG has increased in Zeder, to 1.43 billion rand. The valuation consideration is very similar to what we applied Zaad, a comparable EV/EBITDA multiple. We use the prior audited numbers as a base, obviously taking into account the current interim numbers. Then we applied a market-rated EBITDA and deducted the net debt. This business has got very low debt, generates very good cash. And as you see, the net debt of this business at the end of June was only about 100 million rand. Business has been resilient. As I mentioned, good recovery. The Rosano Garcia terminal, that's a rail terminal just past the Komati Poort border, was opened in July. Very, very excited about that initiative. It pretty much means that trucks that come through the border in Komati Poort no longer need to drive all the way to Maputo Harbour. They can stop at our terminal, we'll load it on a train, and we'll send it straight into the harbour. It's a great initiative by management. It's a new asset. Did not contribute to earnings at year end, but will now going forward. And management is in discussions with similar initiatives on other African corridors. The KwaZulu-Natal unrest, fortunately for us, there were some disruptions in Durban at our port facility, but it was of a short-term nature, and it's since been restored to normal. As I mentioned, this business got a very, very strong balance sheet, good cash generation, and growth can be funded from its own balance sheet without the assistance from Zeder. Capespan, our fruit business. This business got global marketing reach into North America, Europe, and also into Asia. It's run by Tony Fuchs. This business reported a loss for the first 6 months, which is normal. As I said, it is part of the agri-input cycle. The loss is slightly bigger than the prior year, but there's a good reason for that, and I'll explain it now in a little bit more detail. In terms of the numbers, you'll see the balance sheet NAV there, the 1.3, 1.4 billion, and just putting it in context in terms of the Zeder valuation and our sum of the parts. Business also has no long-term debt, and the net debt currently on the balance sheet is about 66 million rand. As a result of the agri-input cycle, it's very difficult to revalue Capespan at this stage. We obviously look at the balance sheet at half year, look for permanent impairment indicators. If there are any, there were none of those. So we kept the valuation the same. This valuation is done differently than TLG and and Zaad because it's got a strong asset base. So we look at a NAV-based valuation. We do obtain independent third-party valuations on our farms. On our associate investments, we apply a PE multiple, and then we apply a market-rated discount to the group NAV in terms of our valuations. So just in terms of why the higher loss compared to the prior year, and the prior year, the decision was made during COVID to push as much fruit into the market that we can, especially on the POM side, and that obviously resulted in revenue being realized earlier than normal in the prior year, and that's why the resultant loss in this year is slightly higher. In terms of KwaZulu-Natal unrest, it was during the key citrus season. Citrus on the farming side is probably the smaller part of Capespan's business, so it had a limited impact. But it did have and will have an impact on citrus growers, going forward, in terms of price and whether the appropriate window was achieved. But I think this business, Capespan, after the restructuring of the global marketing position, is a much more leaner, meaner business. Agriculture in the Western Cape, where most of our farms are located, is still looking promising. But in terms of COVID, because we need to get fresh fruit from Southern Hemisphere into Northern Hemisphere, shipping rates, availability of containers, especially cold storage containers, has been a concern for us. Hopefully this will normalize in time for the grape season that's upcoming. But once again, management has been proactive in putting in measures to try and mitigate this potential risk. In terms of Kaap Agri, the agri retailer run by Sean Welsh, a great management team. Kaap Agri's footprint is mostly in the Western Cape, also in the Southern Cape, but also grown into KwaZulu-Natal with an acquisition of Forge Agri about 2 years ago. Also operates in the Nelspruit area. And for Kaap Agri at their half year, which has already been reported to the market, had a 23% increase in interim earnings. Also restored them interim dividend, and the business doing well. And it's also nice to see the share price increasing over time. As a result of the increase in the JSE listed share price, the valuation of Kaap Agri has also increased in our books to 1.39 billion rand. On the right hand side, you'll see the valuation approach we follow. We literally market it to the JSE listed price at our interim and our full year end, and there you can see the share price movement over time. As I mentioned, the dividend was restored. Decision previously taken not to pay the dividend and be cautious during COVID, but the business is doing well. And I said this management team has really been proactive during COVID. Being in the Western Cape, largely, conditions here are favourable. We've had a very good winter. Dams are still full. So it bodes well for farmers in this area, and Kaap Agri is obviously well positioned, to benefit from that. In terms of the wheat harvest, it's currently in the lands in the Swartland area, also looks promising. So that should also bode well for Kaap Agri going forward. In terms of a transaction, Kaap Agri on Monday announced that they sold the shares in their fuel property business. That would mean about 446 million that goes to Kaap Agri. As their sense indicated, in the meantime, the funds, when received, will reduce gearing and also enable Kaap Agri to invest in high yielding projects over time going forward. And I'd refer you to the sense, and if you want any more information, I would invite you to speak to the management team at Kaap Agri directly. In terms of AgriVision, our vertical farming business or integrated business in Zambia, lots of changes in Zambia. This business is actually in a very good place at the moment. If you'll remember, we've always had a bit of a water problem in the Makushi area. This is the first year in many years that we were able to plant full hectares in the Makushi area, and has done very, very well for this business. As a result of the improved performance, we've managed to reduce gearing at this business. You'll see if you compare the June 20 numbers to June 21, gearing reduced by almost 33%, so that's a significant achievement. So the business is really doing well, and just indication of the balance sheet NAV there, these numbers are in US dollars. That's the currency that this business operates in. And just to also put that into perspective with the Zeder valuation. As a result of the annual input cost cycle, very similar to Capespan, we've not adjusted the valuation at year end. The valuation approach is the same as what we would use at Capespan. We once again do independent third-party valuations, but we do apply a different discount to this that we do in Capespan, taking obviously into account additional investment risk factors. The improved results as a result of promising yields on soya. The commodity prices are favorable in the market currently, and we were able to plant a full crop of wheat on our Makushi farming block, which enabled us to probably generate better returns. The Zambian elections, recent Zambian elections, we view it as positive. You can probably see that from the strengthening of the kwacha against major currencies. So we're excited about the changes in the country. But this is still a small investment in Zeder's books. If you compare it to our sum of the parts, it's probably less than 2.5% of our sum of the parts. In terms of prospects and strategy for Zeder, I think we're in a good position. We've got good assets, good portfolio investments run by good management teams. I think agricultural conditions in South Africa is promising. Obviously, a business like Zaad's got reaches in other areas as well, but the promising conditions should bode well for businesses like Capespan and Kaap Agri specifically. The demand for agri inputs as a result of the favorable conditions means fertilizer and big items, bulk and break bulk items is coming into the country, which is good for TLG, as well as the commodity boom. I know there's been some pressure on some commodity prices and demand, but it's still in a good space for us. But I think also with farmers, there'll be increased pressure on farmers going forward. Agri inputs, the prices have really gone up. Things like fertilizer, fuel, other agri inputs, so there will probably be some margin pressure on farmers going forward. And I think in terms of COVID, the impact on supply chains is a key item, but it's being monitored by all of our management teams on a constant basis. So I think all in all, our portfolio is well positioned to benefit from mostly the positive trading conditions going forward. And I'm very optimistic about the prospects for our portfolio in the short term. In terms of our strategy, we mentioned also at the end of our interim results last year, we're still going to focus on our current investment portfolio. We've done that from last year August to this year August. We've added about 1.4 billion to our sum of the parts. We are, however, trading under a cautionary since April. It's been almost 6 months and we trade under cautionary. We've renewed our cautionary at the end of September. And the board is still evaluating those approaches we received on various assets. We've made some very, very good progress in some cases, but COVID has delayed it in certain instances. And I think, it just takes longer to look at these approaches currently. I think it's normal in the industry currently. And if we're going to do a transaction, we want to do what's good for our shareholders. We want to maximize shareholder value. And in order to do that, we need to act in a responsible manner in evaluating these approaches. So I think, our overall strategy remains. We need to create shareholder value. For us, what does that mean? It means we need to grow our portfolio. I think we've done that in the last 12 months. I think the prospects still looks promising for our portfolio. We need to pay dividends to our shareholders. We've returned capital as part of the Pioneer transaction, but also a further special dividend. If our portfolio does well at year end, there'll be further dividends from operational cash flows. And then, in terms of other value unlock strategies, evaluating these approaches, and we're going to see where it goes. And we'll be responsible and we'll communicate to the market at the right time. And as I mentioned before, we'll do what's right for shareholders in order to maximize shareholder value. That brings me to the end of my presentation. I'll hand over now to the Q&A session. If you can maybe just give us a minute or so just to collate the questions, and then I'll be available to answer your questions. Thank you very much.
Thank you, Johann. There's a couple of questions. The first is, what is included in other net assets in the sum of the parts breakdown?
Thank you, Johan. The other assets, it's mainly bridge loans that we offered to Kaap Agri. So I think in that balance, just over 300 million is loans we extended to ZARD for the EAC transaction, but also when we bought 100% of the Farmac transaction. So it's the majority of that is loans to ZARD.
Okay, so not Kaap Agri to ZARD.
To ZARD, sorry, yes.
The second question is, thank you for unlocking value for shareholders. We really appreciate it. How does the African prospects look of TLG going forward?
Thank you. I think for TLG, that is where we see the growth. We've opened that Rosano Garcia terminal now in Mozambique. It's almost like a test for us. It's working very, very well. It's immediately profitable, and we can see the growth. As clients see the benefits of us managing these bottleneck assets. We're currently looking at the key corridor between Zambia and Tanzania, a town Kapiri-Mposh and Dar es Salaam, which is also a key corridor for mining. So we're very optimistic about the prospects. Our management team knows how to operate in Africa, and they can find these sweet spots in terms of bottleneck assets. I'm very optimistic about the growth prospects.
Okay, thank you, Johan. The next question is, why has Kaap Agri, for example, not been spun out to Zeder shareholders?
It's an interesting question. I mean, it's obviously an option that we have. It's not been considered by the board, but I think for now, we need to get clarity on where we will go with all the approaches being received. So I think that's our focus area currently.
Another question, Johan, is, and I don't know to what extent it can be answered here, but can you elaborate on what the nature of TLG's contracts are with its customers? For example, take or pay, duration, etc. I don't think that is necessarily for discussion, but you can elaborate if you know.
It's quite a detailed question. I mean, obviously it depends on the type of customer. So I think it's probably better if you can maybe email me separately, and then I can provide you more detail or put you in touch with the management team.
Okay, thank you. The next question is, and just bear with us, it's coming in as we speak, so we must just sort of go through them. Nice set of results. The team at TLG appears to be doing a great job. Are there opportunities to leverage their skill set over a bigger set of assets via acquisitions, which are currently performing suboptimally, or is TLG an organic growth story?
I think as part of any growth strategy for our portfolio companies, we'll look at acquisitions that make sense. What we like about our current TLG grouping is that it's an asset-light business. So we won't go invest in another logistics business that owns trucks or warehouses. We like to operate key assets. But no, I think this business will also be acquisitive, and we'll look at strategic assets where we can still grow from there into other areas. So it'll be part of the strategy, and it is part of the strategy.
Thank you, Johan. The next question is, the group is a lot smaller now than in prior years. What is done to limit overhead costs?
We're a small team at Zeder at head office, so we're very, very cost sensitive. Currently, the cost at Zeder is less than 0.4% of some of the parts. So no, we cost sensitive. We don't want to have a overhead structure that's not attractive to our shareholders. So no, there's definitely a focus on that.
Okay, thank you, Johan. The next question is, and I think maybe on the ZARD valuation, etc., maybe if some of the can be emailed to you if more detail is required on that. And
sure.
We can handle that. For whoever asked the question, please do that, and then we can correspond back to you. The second question here is with regard to bids received and approaches received, whether one cannot disclose more, etc. I think I can answer that. At the moment, we are still under cautionary. And once more clarity is obtained with regard to that, and the board must consider everything in totality, then there will be communication to all the other shareholders. Do you agree with that, Johann?
Yes.
Just give it one more minute, see if there isn't further questions posed. Okay, there's no further questions that come in, Johann, so we are going to conclude the questions.
Yeah. Thank you, Johann. Yes, and ladies and gentlemen, thank you very much for your time today. Appreciate you listening to me. We've got an open door policy here. If there's any more questions that you think of at a later stage, please get in touch with me directly. Thank you.